Hello, everyone. So today we're going to talk about raising from UK investors and the things you need to do to attract them. So my assumption, if you're watching this, you have a French company, but it could be any non-UK company. And the UK has a thriving angel investor ecosystem. If you look at the graphs, it's the largest in Europe after France and other countries. And that's not to say that UK founders aren't struggling for investment and looking to the US, which we may get to a bit later. But certainly, if you can attract UK investors, it gives you a much bigger playing field to play. And UK investors are all after those early stage SEIS and EIS tax benefits. So, for those who don't know it, there's a fantastic system in the UK that if you're an angel investor investing personally, after you've invested in a company that offers SEIS, the Seed Enterprise Investment Scheme, you can deduct 50% of your investment from your income tax this year or backdated to the previous year. And a company can raise up to £250,000 with these SEIS tax benefits. And after you've raised £250,000 of those, you can then raise 10 or 15 million pounds in EIS, Enterprise Investment Scheme, which is slightly less good, and there the investor can deduct 30% of their investment amount in your company from their income tax this tax year or the previous tax year. So with tax incentives like this, it de-risks it for UK angel investors. But it's not only deducting the initial amount. If they keep their shares for 3 years and sell them after that, they pay no capital gains tax. And if the company goes bankrupt, they can tax deduct their loss as well. So when you are an early stage startup and you're fundraising in the UK, you are a lot less investable if you cannot offer investors these tax benefits. I'd say 80% of all early stage investment in the UK is done with these tax benefits. And it's generally angel investors, they're the ones who can benefit from it. So the other thing to notice is that I think startups go to VCs too soon. And this applies in France and it applies in the UK as well. So apart from looking to raise from UK investors, let's talk about raising from angel investors versus VCs for a minute, because that's generally useful for everyone. So I think the standard problem is if you're a startup founder and you're looking to fundraise, you don't know any angel investors, anyone investing personally. Maybe you're a bit embarrassed to ask them. So you do some Googling and you find the list of the top 20 VCs or the top 10 early stage funds and so on, and you write to them. The problem is the 99% chance is you're going to get back an email saying, love what you're doing, come back later. You're too early. Maybe you'll get lucky and get a meeting with them. And then they say the same thing, come back later. And the sad reality is VCs, with few exceptions, generally only invest once a company has got revenue and growth. So if you're still building the product or you've built it and you don't have revenue or significant revenue, it's the story of your life, come back later. And how do you break out of the cycle? And the answer is you raise from angel investors in the meantime. So the vast majority of early stage fundraising in the UK is from angel investment. And the same would be in France. France, I think, has a less robust, less vibrant angel investment ecosystem, and you may be dependent on VCs at a little earlier stage. And now on this call is your chance to see how to tap into investment from UK investors, and we may talk about US as well. So many billions go into investment in the UK. There's about £250 million on these SEIS investment and 2 billion or 3 billion in EIS investment. So how are you going to tap into it? So if you're looking to tap into investment in the UK, you need to do a few things. Of course, number one, you need to reach out and find UK investors. Number two, you need to persuade them to want to invest in a non-UK company, which will always be more friction than investing in a UK company. And number three, you need to tempt them with these tax benefits. So let's start with finding investors, because that's a general problem for everyone, no matter where you are. So, of course, you don't know angel investors. How are you going to find them? My take is you should be as shameless as you can be. Post all over the internet what you're working on. Be careful not to make it a financial promotion. Don't say we're offering 10 times returns in 3 years guaranteed, because that's a financial promotion, which you should be cautious of. But writing articles on the problem you're solving, doing LinkedIn posts on the problem you're solving, doing direct outreach to people is what you want to do. So there are a few interviews and webinars I've done on how to find angel investors. But broadly, I would say there are a few classes of things. Number one is content marketing. So when people Google you, which of course an investor is going to do as soon as they come across some outreach from you or they've heard of you, if they see nothing other than your website, and maybe they don't even see your website making it to the top page, it's a clear signal that you're not very active. But if they start seeing lots and lots of articles about your company, that's a great sign. And Google does a great job picking up LinkedIn posts and so on. So what you want to do is be as prolific as you can in writing articles. So on Seed Legals, of course, right at the beginning, I loved writing articles. I wrote articles actually in the early days, not because I realized this was a great way of getting traction, but because I got tired of answering the same questions again and again. So I wrote an article on it, and these articles became very well read. So a great example of content marketing is Seed Legal's customer sells tea, and I love looking at our customers' websites and buying from them as well. And I love green tea. So I looked at their website, and they had beautiful pictures of green tea and the 20 different varieties and so on. But I was quite disappointed. I was expecting they would have articles on the perfect water temperature for boiling tea, or should you put cold water in, or oxygenated water, when's the tea picked? They could have had a lot of content that would have been picked up by Google, that they could have sent out to magazines and so on, that they could have put on LinkedIn. So thing one is, I know it's a bit off topic of just raising SEIs, but it's about getting noticed by investors. Thing two is investor outreach. So here you can use LinkedIn Sales Navigator. You can just start messaging people. A good trick in the UK is there's Companies House. This is the company registry, the equivalent of CREF in France. But there in the UK, the investor details are all public. It goes on the company's confirmation statement. So if you find companies in a similar space to yours, maybe a UK company, you can look them up on Companies House. You can look at their last confirmation statement. You can see the investors in those companies, and you can begin writing to them. You can look them up on LinkedIn and so on and write to them. And maybe your angle will be, I saw you invested in this UK company. How about diversifying your bets? The pound may go up, the pound may go down. I've got a great French company that you can I'd love to tell you about. Of course, you wouldn't say I've got a great French company. I'd say you invested in something that's very similar to ours. We've got a great product, and so you're going to talk about the product and entice the investor. So that investor outreach is going to be super important no matter where you are. So now you're a French company and you want to reach out to those UK investors, and your outreach would want to ideally contain those magic words, SEIS, which makes all investors go, yes, I'm in, as opposed to moving on to the next investment opportunity. So now we're going to dive into what you're going to do to qualify. And it's a bit of an admin overhead, both upfront and ongoing, but hopefully it's going to be worthwhile. So the first thing you need to do to be able to offer these tax benefits is you need to register your French company as a foreign entity in the UK. This is different to creating a subsidiary. What you would do is you would go onto the UK Companies House and you register a foreign entity. This means it creates almost like a child entity in the UK. And now the UK HMRC can issue you a tax reference number for your company, and you can then use that and your UK foreign entity registration to apply to the government for what's called SEIS advance assurance. And this is where you get a letter from the government saying you can now tell your investors that you can offer them SEIS tax benefits. So in the UK, it's not obligatory to get this advance assurance, but most investors are looking for it, and most startups will do it. If you've got a non-UK company, investors will almost certainly be asking for it because they want to be assured that they will be able to get these benefits. So you really need to do this. Now, as we heard a little earlier, one of the key problems in this process is it takes quite some time for Companies House to issue this tax reference number, or for HMRC to do it. So we've seen companies waiting 6 to 8 weeks to get this number back. And once you've got this number, then you can do the rest. So leave lots of time for it. There's no cost to doing it. It'll take you maybe an hour to do on Companies House. It's a bit of a pain, but again, if you're looking for that big investment sector in the UK, it's worthwhile doing. So the next thing is to now apply for your advance assurance. And here's something that you actually will need some effort from the company to do, which is in order to use taxpayer benefits in the UK to fund essentially your French company, the government in the UK needs that you have to have a presence in the UK. And this means that you need to have an office with a senior person in the company based in the UK. Senior means somebody who can make decisions. So junior web developer won't count, but maybe the head of sales or one of the executive team will. You don't need a permanent office, as in office space. It can be at a WeWork, but it does need it to have a physical address. So somebody in the UK and a physical address. And of course, if you're planning to sell into the UK market, this will be natural that you would have. If not, it would be one of the decisions to make. Is it worthwhile to set up or not? Now, by the way, if you've got any questions, please do put them in the chat. So now you've got your foreign entity registered, you've got your person in the UK, and now you can apply to the government, HMRC, for your advance assurance. And there we can help you do that on SeedLegals. So you're going to need to provide a pitch deck, you're going to need a 5-year business plan, the same materials you would provide to an investor. And you now also need to provide the details of intended investors. They don't need to be committed, but they do need to be intended. Some intention to invest because it is the government. I wouldn't just make up the names. So you'd be talking to investors. You might say to them, are you okay if I use your name for my advance assurance application? I think investors in general will be happy with that. There's no commitment and the government doesn't contact them. But again, you want to have genuine investors who are likely, they don't have to invest. And these would need to be UK SEIS investors that you use on your application. And then a couple of weeks later, you will get your advance assurance back from the government. And now you can go and tell UK investors, we can offer you SEIS tax benefits. And now you can begin on your LinkedIn outreach or any other messaging where you're targeting those investors. You can start saying the magic SEIS words. By the way, there are a few other things that the company needs to qualify for SEIS. Your total gross assets, that typically means for an early stage company, the money in the bank needs to be less than £350,000, excluding the SEIS investments. And you need to have been trading for less than 3 years. You could have been incorporated for longer, but trading as in doing business for less than 3 years. And the vast majority of early stage companies would qualify for this. And there are many articles on the SeedLegals site. If you Google SeedLegals SEIS, and these apply to all companies. So if you've gotten this far, that's great. So now you have investors who are interested and they call you and said, I would love to invest. So now there are a few things to keep in mind for their investments. The first thing is there's a rule that says if an investor gives you money, under the scheme, you have to give them shares within a maximum of 3 months, unless you've got an advanced subscription agreement, which is an agreement that says, I'm going to give you money now and you'll give me shares later. And the standard form of that in France, as we know, is the BSAR, and you can do that on seed legals. So you are typically, for your French funding round, regardless of where your investors are going to be, you're either going to do a funding round, so investor gives you money, you give them shares immediately, or you're going to raise, which is increasingly the fashion, with the BSAR. And of course, you can do both of those on seed legals. So just like raising from French investors, you're going to raise BSARs, usually before the round, and we'll get onto that in a moment. But with UK investors, there has to be a limit of no more than 6 months from the investment until shares are issued. So when you create a BSAR, you need to set what's called the long stop date to no more than 6 months. And this means that if you do a funding round within 6 months, great, it converts in the funding round. But if you don't do a funding round within that time, then it will convert anyway. You will convert it and give them shares at what is the long stop valuation that you set in the BSAR. So let me spend just a moment on BSAR first funding round. So in the UK, we have the same concept as the BSAR. It's called an advanced subscription agreement, same thing. And on Seed Legals, our brand name is a Seed Fast. And these are immensely popular. More than 20,000 of them have been created. I would say 70% of all early stage fundraising in the UK is by Seed Fast, or the equivalent of BSARs, rather than a funding round or topping up a funding round. The funding round itself used to be the only way to raise investment. And now the funding round is almost a dinosaur. It's it's been replaced by agile fundraising, where you raise from individual investors ahead of the round instead of doing a funding round. And I think of a funding round a bit like a bus trip. You have to get the investors on the bus. The bus can only leave when the last investors have arrived. You're finding the stragglers, you're pushing them on the bus. And when you meet somebody who says, hello, can I invest in your company? Instead of saying, yes, I'll send you a document this evening to invest, you have to say, come back in 3 months when I found the other investors. So rather than this bus trip, what if you could get an Uber for each investor individually? So that when you talk to them, you can go, yes, let me send you a BSAR this evening. Get your money now. And then when I find the other passengers for the bus, you can get on the bus with them. I've got your money to help me grow the business. Because you're coming in earlier, I'll incentivize you with a 10 or 20% discount compared to what the other investors will get. And this has completely revolutionized the way founders in the UK raise investment. And I'm assuming it's the same in France, or will soon be the same in France, because it's just going to follow the trend in the UK and the US. So when you use a BSAR, if you are raising from these UK investors offering SEIS and EIS, it'll be the same as for your French investors, but with 2 differences. Number 1, remember that long stop date. And number 2, one of the big benefits in the UK for founders is that in order to qualify for these SEIS benefits, the investor has to get ordinary shares. They can't get preference shares. So in Europe and the rest of the world, when investors invest, they generally want preference shares. This means on a sale of your company, they get their money back first. And this means if you've raised a lot of money with preference shares and you sell your company for a small amount, the investors may get most of that purchase price and you get very little. So it's much more favorable for founders if you can raise and investors get the same shares as you, ordinary shares. Now, with SEIS, the government has said the investor has to get ordinary shares. They have to take what's called the ordinary risks of an investor. And in the UK, this has meant a different pattern for early stage rounds. where founders are generally selling ordinary shares, not preference shares. And it's only when you have a VC coming along later that they insist on preference shares. So this is advantageous to founders. Another inadvertent side effect benefit of the SEIS and EIS. So now I'm going to pause for a moment. I'm going to look at the questions and see. And by the way, if you've got any questions, please post them in the chat. And all right. And Tristan is saying that the process has taken 4 to 5 months, which is actually surprisingly slow. And Tristan, I'm guessing, has an address in the UK for correspondence to be sent to. So, all right. Question from Rudy: does the senior person in the UK need to be full-time? Can this be a shared resource? Great question. I think it needs to be, I don't think it needs to be full-time, but it can't be an outsourced consultant. I think it needs to be an employee of the company. Whether they're doing something else on the side is probably okay, but it will be frowned on and not be accepted if it's just somebody hiring for a few hours per week. Most likely. All right. So the registered representative, as Tristan said. So yes, it's going to come down to the facts. So if it looks like it's a person you've hired for a couple of hours a week, less likely. If it looks like it's substantially on board your company and a decision maker, then yes. All right. Any other questions? Let me know. And any other particular things we'd like to cover, let me know. All right. So now, you've raised investment with BSA from French investors and from UK investors. So the next thing is, at some point, your BSA need to convert. And for your UK investors, no more than 6 months. And at this point, you're going to issue them shares, typically with a funding round. You've got enough passengers on the bus is now going to go, and they're going to get ordinary shares. And at this point, for your SEIS investors, you will do something called SEIS compliance. And this is where you write to the government so that the government gives back the certificates that they can use to claim their tax benefits. And you can do this on SeedLegals. It takes very little of your time. And then the investors are delighted, they claim their tax, and they're happy investors. And if something doesn't work out in the business, they can claim their loss relief. And if the business goes brilliantly and they sell their shares later, after 3 years, then they pay no capital gains tax. So that is the basics of being able to raise from UK investors. Now, the biggest part of this, of course, I've outlined admin overheads. Obviously, there's a time cost for you to administer this. So it needs to be worthwhile. If you're raising, let's say, €500,000 and you find 20,000 euros worth of UK investment, it's probably not worth the extra effort. If, however, you find £200,000 or euros of UK investment, then it is worth it, because that's going to make or break your funding round and get you to the next level. And the overhead will be small in the scheme of things. So the biggest, of course, then problem to solve is how to entice investors to invest, whether they be French investors or UK investors, or in fact investors anywhere else in the world. Because, of course, if you're struggling to find investors in your home country, whether that be French founders in France or UK investors in the UK, you can always look further afield. But when you look further afield, you're now competing with companies in those other countries. So maybe Singapore, Dubai, and so on have got fewer companies and lots of investors, so the competition will be easier. If you're looking to raise from US investors, well, there are many thousands of startups in the US, so you're going to be competing with them for investment. It's going to be harder. So let's talk about attracting foreign investors. We're done with the overheads of the SEIS scheme and so on, and we're now simply talking about how to attract investors. So investors come in many flavors. And for me, I always like to start by thinking, what kind of investor personality are you talking to? Some investors are spreadsheet gurus. They're going to look at your 5-year business plan. They're going to look at the exit potential, the TAM, the SAM, the SOM, the market size, and run the numbers and decide whether you're a good investment or not. Others want to save the planet. You're doing carbon, oceans, seaweed, carbon capture. I'm in. They don't care if you're going to make money or not. It's a save the planet. That's awesome. Others want to hang out with the cool kids. They want bragging rights. I was the first money into this AI company that's doing whatever it might be. Others might want to sort of be an advisor on your company, which you should be a bit careful of. So you're going to think about the different types of investors that might want to invest. And as you start coming across investors, you're going to think about what does this person want, and you're going to tailor your pitch to them. So you're only going to have one pitch deck, of course. But if you meet somebody who clearly is a numbers person, you're going to emphasize that part. And likewise, when you do LinkedIn outreach, you are going to try to figure out if this person's a multiple exited founder. You might play to the things that drove them to start their last startups, the problems that you're solving that were aligned with them. If you see it's an investor that invests in certain segments, you're going to play to those segments. If you see it's somebody that writes a lot of content on something, then you might, of course, talk about how you're solving that problem and it aligns with the content. But all of this is about how to go out and excite people to invest in your company. And that's all about storytelling. And I've done a great webinar with a person called Claire McMillan, an ex-barrister, criminal lawyer, now pitch deck coach. How did she change from criminal lawyer to pitch deck coach? Well, she said in her years of being a barrister, cases were very rarely won or lost on the facts, which is a bit worrying. It was always about the story. So she now helps startups create that story, the drama. So your pitch deck, every page of it is going to be a story that is unfolding. So what's the problem we're solving? How are we solving it? What's the size of the market? What's the competition? Meet the team. This is what we're raising. This is how much the projections are. Call me. And like a Netflix drama, the aim of each episode is to get the person to watch the next episode. So your LinkedIn outreach is going to be, don't send a pitch deck. You're going to send a short message. You might A/B test, just connecting without any message, or connecting with a message. Hey, I saw that you're interested in, this particular space. We're working on a new solution for this problem. I'd love to tell you more. Keep it short and dangling. And if the person accepts, then great, follow up and tell them more. And your goal is to get on a call with the pitch deck. Some people like to send the pitch deck up front. Some people ask to send the pitch deck up front. I prefer to not send the pitch deck up front and just send the teaser up front, and the pitch deck is then done on a call. Definitely try to get the investor at least to ask to send the pitch deck, because if you send the pitch deck unsolicited, here's an email with the pitch deck, and the person never responds, you don't know if it means they've read your pitch deck and just aren't interested, or they've never looked at the pitch deck and don't know what it is. And it makes it hard to follow up. If you don't hear from them, does it mean they're really out or they're just not looked? Whereas if you send a short teaser message without a pitch deck, then the door is open to say, can I send you more? Can we get on a call? Can I share the pitch deck with you and over a call? So my preference for me, others have different views, is hook the person to connect with you, respond, and then try to get on a call to go through it together with the pitch deck. Now, straying completely from SEIs into finding investors, one of the key problems I see when founders get on a call with investors is they spend the whole call going through the pitch deck. And so there's no time for questions. Investors are a bit bored. They may well have seen the pitch deck and read it beforehand. And so what is the best way to do an investor call? And my suggestion is, firstly, if you have sent the pitch deck beforehand, in theory, the investor should have gone through it. But we know they probably haven't. Some might. They might have flipped through it. They might have gone through it in detail. Many probably wouldn't even bothered opening it. So now if you've sent the deck up front, you've now got a quandary. Do I assume the investor has gone through my pitch deck? Do I ask them? But that's a bit embarrassing. If I ask them and they say no, will they say no? Will they lie? They go, well, I flipped through it. And then what do you do? So you're better off not having sent the pitch deck before. But if you have, you now have to hedge your bets. Regardless, if you've got a 30-minute call, here's the way I would suggest running it. So number one, engage in a bit of chat with the investor to find out what drives the investor. Before you talk at them for half an hour, learn what their drivers are. So, hi, which other companies in the space have you invested in? Are you a lead investor or a follower investor? That's a really important question, because some investors will only invest once they've seen a lead investor arrive, which case you need to keep them warm. They're not going to invest on this call. Others will be happy to invest without waiting for others, in which case you want to maximize the call to get their investment. So you're going to ask a few questions about what drives them, what other things they're seeing in the field, and obviously don't spend a great deal of time on this, because otherwise they're going to wonder, are you going to show me the pitch deck? But do enough so that you understand a bit more about the drive for that investor. And then maybe spend 10 minutes on the pitch deck. So you go through it reasonably quickly, so it leaves it with the investor wanting more. And then open it up for Q&A. Ask them their thoughts, ask them any things that the questions they've got, any things to discuss. If you've got a product that you can demo, ask if they'd like a product demo. And now you've got time to do all of this, rather than when I've seen people just talk forever on the call, and at the end the call's done. It's like, okay, what am I meant to do next? So those would be my tips once you get on an investor call. The other thing, of course, is the more you network, the more investor interest. So if there are events you can go to and so on, then do as many of those. Practice the art of the pitch, practice the 1-minute pitch, the 3-minute pitch, the 5-minute pitch, so that when you talk to investors, you've got it nailed. All right. Now, I think I've covered all of these points, particularly the SEIS, the investor pitch. I'm going to now switch to one other area which wasn't advertised on the presentation, but that is from raising from US investors. So, of course, it's a bit like fish in the sea. There's always a bigger fish. And people in Eastern Europe look to France, Germany, and so on for investors. People in France and Germany, the UK is a bit of a bigger market. People in the UK are looking to the US. And when you get to the US, you discover that people in New York are looking to the big fish, which is the Bay Area. So there's always a bigger fish. But if you can tap into the UK investment, that's great. If you can tap into the US, that's potentially even better. So in the US, you're going to have a bigger challenge because you're competing with a lot of US companies. And if you're a UK company, maybe they'll understand English law. The documents are in English. If you're a French company, it might be harder. The BSAR, when you do it on SeedLegals, we create a French and an English translation. So that makes it nice and easy for investors. When you get to a funding round, the term sheet on SeedLegals is also in English and in French, but the main funding round documents are in French only. So investors are definitely you're going to be at a disadvantage compared to US companies, because you're going to have to persuade your investors to invest in legals and language that they don't understand. But if it's an attractive investment, maybe they'll be happy to do it. Investors in the US aren't familiar with SeedFast, and they're not familiar with BSARs. They're familiar with their local flavor called a SAFE. And if you're a UK company, you can create a SAFE on SeedLegals. That's in English law. We haven't created a SAFE in French law, but you can contact me if you are looking to raise from US investors to see what we can help with. What you don't want to do is download the YC SAFE template, because that's going to say it's Delaware law and the SEC regulations apply, and you're committing things with the SEC, and you're going to find yourself in all sorts of US jurisdiction commitments that you want to avoid. You want to have a local French law version of a SAFE if you're raising from US investors. You may persuade them to invest with the BSAR, but they are familiar with the SAFE, and for least friction, you might do a SAFE. So the other thing is when you raise from US investors, there's what's called the Delaware flip. So should you raise with them investing in your French company, or will it be advantageous, or will they insist that you create a Delaware C corporation as your top company and so-called flip your French company into that? So that used to be incredibly expensive and complicated. And my next mission at Seed Legals is to productize that. So I'm going to make it super easy so that you can create a Delaware company and raise from that huge US market into your Delaware company. And now that I'm spending half my time in London, half in New York, I can see that in London, your typical early stage funding round is raising maybe £250,000 at maybe £1.5 million valuation. In New York, it's raising $1 million at a $5 million valuation. Now, New York salaries are much higher, so that money probably gets spent faster, but valuations and amount raised in the US is higher, and that is an attractive option. So if you are thinking of taking your French company, flipping it to be a US company, and then targeting US investors, that's definitely possible. And if you contact me, we can talk more about that. Of course, for a US investor, just having spent $500 making a Delaware company may not change very much because they still see the team is in France, maybe you're targeting the French market, maybe your comms are all in French. Just because you've got a Delaware company, great, it means the legal agreements are familiar to them in US legals, but it's not changing fundamentally that you're addressing, for example, a French market of 70 million people instead of a US market of 350 or whatever million people. So you may additionally only find that you'll attract US investors once you are scaling into the US. All right, I think that is it. Should we jump into any questions? If anyone would like to turn on video, tell me about the problem space that they've got. I'm delighted we dive into that.
Hi.
All right. Hi, Rudy.
Hey, how are you doing? Thank you very much for taking the time. That's really interesting. I have a long history in corporate, and I'm just going into startup now, concentrating in 3 countries like Switzerland, many countries, Switzerland, French, Belgium, and in the UK. I don't know how I got your numbers. Maybe it was like a common connection or something, but the service you provide, you're coming on, because I see Seed Legal. So are you more on the legal? Are you more on fundraising? Are you more on market expansion? If you can tell me a little bit more about that. Thank you.
Yeah, great question. I didn't introduce Seed Legals. So Seed Legals, we do the legals for your funding round. So we don't find investors and we don't do the market side of things. So instead of going to a lawyer, you would get on Seed Legals to do all your funding agreements, your cap table, your founder agreements, NDAs, team agreements, and so on. So it's a modern platform replacement for a law firm. And that's what we do. And of course, separate to that, I'm here to help on webinars and so on, founders with all the related things, but as a service, Seed Legals is for the legal documents.
Thank you so much for that. And follow-up question, well, what is your business model? Are you working on subscription? Are you working on budget-based?
Great question. So there are 2 parts. There's an annual subscription, 990 euros or 990 pounds in the UK, that gets you cap table and NDAs, consulting agreements, and a range of the agreements you need for your hiring people in your company, hiring consultants and doing business. And then when it comes to fundraising, we've got a model that's proportional to the amount that you want to raise. So if you're raising 300,000 euros, it's probably on the order of 3,000 euros in fees for all the documents. So unlike a law firm, we don't charge by the hour. We've got a structure that scales with the amount that you are raising. All right, fantastic. Anyone else like to jump in. Any other questions? All right.
Anthony,
Hello, Tristan. All right. Hi.
You have got a question there from an Abigail S in the chat.
Oh, right. Okay. So thank you. All right, Abigail. So how to identify active angels and how to identify potentially relevant investors such as sector and amount. And what if the solution covers several sectors? Well, that's a great question. I'd love to have the answer for it. So how to find angel investors? Well, here's the challenge. In theory, everyone is an angel investor, right? Your mother could be, your friends, the people from the bridge club, professional investors, people talking on LinkedIn a lot. Everyone's potentially an angel investor from, 500 euros to 50,000 euros. So who are you going to approach? Do you find them? Do you just publish and make as much noise and they find you? And there's no one answer, but here are a few things you can do. So if you think about the different ways of finding, number one is, as I mentioned, content marketing. So write as many articles as you can, publish them on LinkedIn, grow your following, and then people begin to find you. And, I work hard at that. I publish LinkedIn once every day or two, sometimes founder interviews, sometimes new things we're working on, sometimes thought pieces, thought leadership pieces. And once you've built up a following, then you can start announcing the things that you're doing. Thing number two is work hard on LinkedIn outreach. So if you see somebody posting on something and you think they might be an investor that you might want to target, drop a note to them. It doesn't have to be just LinkedIn, could be elsewhere, but LinkedIn is a good way of doing it. Number three, do that at scale. So there are multiple ways to get investor lists. Most of those investor lists are nonsense because those investors, an angel investor, if they're on any list, they're probably going to get so many incomings, they don't like it. But in the UK, there's a service, a company, scribelabs.ai, Seed Legal's customer. And what they do is they scrape data from Companies House, that's the government registry, of hundreds of thousands of people who've invested in startups that they've identified. And you can now buy a list of 1,000 or 5,000 investors, and you can then use email automation to create a message that gets sent out to those. And I've seen companies raise 50,000, 100, 200,000 pounds from those techniques. So any way that you can find investors is the go. Now, if you've got a company with many customers, you can just write to those customers. Generally, try to be careful to not make it look like a financial promotion. So, ta-da, you can win thousands, get your money back in 3 years would be bad messaging. But in your next, newsletter update, you can include, we're fundraising, love the product, drop me a note for more. And then, the joys on Seed Legals of being able to create these investment agreements super easily. You can make, BSA Air in 3 minutes on Seed Legals. Then you can start raising from lots of people. And so perhaps if you're raising 300,000 euros, that could be 30 investors at 10,000 euros each, or 10 at 30,000 each, or more. One of my favorite founders I see on Seed Legals is a bakery where they must have done at least 200 seed fasts, which is the UK version of the BSA Air. I'm convinced that every time someone walks into the bakery, the founder says, would you like a baguette? Would you like a sourdough? And would you like a seed fast? And they've raised hundreds of thousands of pounds from literally hundreds of small investors by tapping into their customer base. So as a founder, you're kind of always in fundraising and always in pitch mode, and you want to be able to turn every opportunity where you're talking to people that are relevant into an investment. And then, of course, my hope on Seed Legals is by having the confidence and the ability to create those legal documents when the opportunity arises, you can do it immediately. So I know that was quite a wide answer, but if you've got an example of your business, or a more specific one, I'm happy to dive into that and see.
Can I?
Or Yeah.
Sorry, I don't want to take time of everyone. It's just my use case is a pre-seed investment, so it's a kind of particular one, and it's tech solutions, so not bakery. It's not something that straightforward. I don't know. Again, maybe it's possible to get consultation later on, or you can somehow pivot it to.
Well, why not give a 15-second pitch right here of what you do, and so tell me what the product is.
The product is intelligent platforms such as Google Images, which work with copyrighted images, meaning those that information is reliable.
So do you identify images and
I do not
determine that they're...
identify. I let copyright owners to publish their images in the form of information. So it's not just to view images, it's really to understand what they do. It uses images as a direct reference to the expertise, product, services.
Okay, all right. And how much are you looking to fundraise?
It's 2 million.
And how many people in the team at this time?
It's just a small team. So it's very, very early stage.
Okay, all right. Well, okay, great. So perfect example, right? So you're looking to raise 2 million. 2 million is quite a lot for an early stage company.
Yes, but it's an exception.
Okay, and it may turn out, of course, raising 2 million is awesome, but you probably, if let's say you're 3 or 4 people, you didn't need 2 million today. If you had 200,000 in the bank today, you could probably start hiring more people and spending more and so on. So you've got your classic dilemma of, do I try to get everyone on the bus to raise 2 million, or do I start by raising a smaller amount and then iterate from there? And once you've built more of the product, you can then increase the valuation. And I'm not saying what's right or what's wrong, but I usually see the pattern of founders coming to Seed Legal saying, I'm looking to raise a large amount. And when you're raising 2 million, that's a lot of angel investors. So you are probably now talking to VCs. But if you are pre-revenue, and I don't know where your business is yet, VCs will be saying, hey, Abigail, love it, what you're doing, come back later. And so you may switch strategies to raising with BSAs smaller amounts from angel investors, such that you get more traction, and then you can go off to VCs later. It may not be your primary strategy, but you may find that the way I think of it is fundraising is you want this amount of money, and this is time, and you can either go 0, 0, 0, big amount, or you can get there in some stages. And if you get there in stages, does that help you get there faster? So now, obviously, you don't have a bakery, you've got a more sophisticated audience. So your audience, you may find that the same people who are using your service might also be interested in investing, maybe not the company that's using your service, but the people at the company. Maybe they're media companies, maybe those media company owners have got some free money. So, in your messaging to your customers, you might start talking about your fundraise. You may reach out on LinkedIn. You may find wherever there are forums where people are talking about copyright and solutions and so on, you start gently posting about what your company does. So it's a lot more of that sort of hustle culture, which might be a little alien to some founders and is completely normal to other founders. So I hope I've slightly...
just a small question. Do you think that on the Scribe Lab service, there would be relevant angels for something like more solid investment, or it's because you use for example of bakeries, so I'm not sure what to think.
Yeah, well, I just use a bakery because it was an example of a non-financially technical founder. She's a baker. And, if I gave, you sort of assume that fintech guru founders and so on, can fundraise, they can figure it out. But what I really love are people who are, make pizza drones, seaweed solutions, whatever it might be, can now fundraise thanks to, the legal tools that we provide. So in your case, Scribe Labs would be, I think, a good... I'm not here just to promote their solution, but I think it would be a good way to target investors who have invested in media, entertainment, a range of things. I mean, you could have a look at the categories that they
That's already
combine.
clear. Thank you. Yes.
Okay. All right. Next question. Anything from anybody? Otherwise, all right. Well, thank you, everyone. Let's call it a wrap. And if you've got any questions, you can always reach me, anthony@seedlegals.com or Anthony Rose on LinkedIn. And if I can help with your fundraise, get UK investors, help with US Delaware flips or anything else, please let me know. Thanks, everyone. Have a great day.